Hey guys, I wanted to talk really quickly about a trading range. So a trading range means that a stock is stuck between 2 points. It's down here at say 20 and it's up here at say 25. And as it bounces around, you're not really quite sure what the stock is going to do. And you'll hear a lot of people say, oh, that stock is stuck in a trading range. I'm going to hold off until it breaks out either to the upside or to the downside, and then it starts to go lower. But what we're looking for in an ideal world is for the stock to break out of the top of the trading range. And when it does, it indicates a buy signal. So you remember how when you were like a little kid and you get in trouble and your mom would say, if all the other kids jumped off a bridge, would you too? And then you go, no, I wouldn't, no. Well, in this case, yes, you would, because traders follow patterns and traders follow the charts. And a lot of people follow those charts. So when a stock breaks out to the upside, it is a buy signal. And it does signal to other traders, hey, we should be buying the stock. Doesn't work 100% of the time. When a stock breaks out, it doesn't always go up. And when a stock breaks out to the downside, it doesn't always go down. It's just a possible indicator. So when you notice that that stock has now, first of all, what you'll notice is that the trading range is getting lower and lower as there's less volume. Now you'll notice that the people down here aren't really selling it. They're the support. So you'll hear that term a lot, support and resistance. Support means we're not gonna let this stock go below a certain price. We're gonna hold it here at these levels, right? You're just holding it at those levels. It can't go lower and it won't go lower until it breaks out to the downside. Then the support is ruined and the stock plummets. The flip side of that is resistance. In other words, there's enough people pressing on it going, I don't know if this stock is going over 25. There's not enough volume, there's not enough hype or publicity to push that stock higher. You're waiting for a breakout either to the downside down here or to the upside up here. When you get consolidation, in other words, the price stock starts to squeeze closer together, right? So now we're 23 and 25. Now that stock is heading towards a breakout. It could still go one way or the other. We're not exactly sure yet, unless there's like some sort of like mega news coming out and you think it's going to be really bad, then you would stay away. And if you think there's a news, an earnings report or an acquisition in the works or a buyout happening or a new product launch or some other bit of news, maybe the economic news or the whole sector is turning around, then you really want to start paying attention. Now that it's bouncing between a tighter range, right? It's not 20 and 25, it's 23 and 25 now. And it's bouncing around. Now you want to be watching to see that stock break out to the upside. When that stock is bouncing between 23 and 25, and then one day it hits 25.01, and it crosses over that top line of resistance, it's an indicator. Now we start paying attention to that stock, because as I go into my scanner and I say, show me all the stocks that have recently broken out to the upside, I'll see that stock. I'll look at the volume, I'll look at the stock, and I'll make a decision. And I'll go, you know what? I think that stock is heading higher. So I'll buy it. And everyone else is too, potentially. Doesn't always work, it's not 100%. But when it does break out, it indicates a buy signal. So everyone starts piling in. This is what momentum investing is, right? Momentum investing means you're riding that quick wave of sudden momentum. Maybe it broke out over here because it had a really good earnings report and everyone's piling in. Well, nothing goes up forever. And you'll notice that that stock, as it moves higher, will go from say 25 to 25.50 to 26 to 26.50 to 27. And as you're watching it move higher, you have to keep in mind a couple of things. First of all, nothing goes up forever. And two, you're missing opportunities by not getting in right at the day when it breaks out or the day after. Usually you'll notice a little pullback the day after, right? It'll break out. Then people will go, hey, you know what? I'm going to sell it here. Then they sell, but then more people pile in and it continues to move higher. That's your signal. That's when you want to potentially buy that stock. Keeping in mind that nothing goes up forever, this is going to be a super quick trade. You're going to get in at say 25.50. So you might be sitting there going, man, I missed. It was 25, now it's 25.50. I can't. Can you believe? Like, you're gonna get frustrated. But you know what? It's okay, because the goal. It's okay. Like, the goal isn't to get everything at the right moment and sell it at the right moment. You don't know that. You're not psychic. The goal is to capitalize on a little upturn and ride that momentum, right? You ride that momentum up. You buy it at 25.50. The next day you sell it at 26.50. You've made $1 per share. You're out. You take your profit. You go, all right, I did it. I made some money. And then, you might even see it the next day go up a little more. But you never want to chase, because remember, nothing goes up forever. So you could say, I bought it at 25.50, I sold it at 26.50, now it's 27, I made a mistake, I should buy back in. And you buy back in at the high, at the 27, and then what do you see happen? I mean, sure, it's possible that it goes to 30, but it's also possible that it drops back down to 25 because people are taking the profits. Imagine that you're down here when it was 20, and imagine you bought it down here at 20, and now it's 27. You're not going to take that profit? I think you would take that profit. I think if I knocked on your door and I said, here's that profit, you bought it at 20, it's 27 now, you want that money? I think you would take it, and I think a lot of people will. So when you see that stock hit 27, don't think I need to get back in. Think, it had a surge. Let's see where it goes. It might pull back. And if it does pull back, it'll establish a new trading range, which might be 25 to 27. And you do it all over again. And that's what a trading range is. Please like and subscribe. And yeah, I got a haircut.